Welcome back to the Brent Bruce Daily, where each day we take a look and see where home loan interest rates really are, what is making the move, and what to expect for the future. Today is May the 15th, 2023. It's about 4:30 p.m. Central Time. The bond market and the mortgage-backed security market are closed for the day, and we need to take a look and see where we are now after a very difficult Friday. Friday was difficult because we got some reports and that talked about the future expectations of inflation and basically saying that they weren't seeing inflation coming down dramatically and fast enough. Now, again, this was a report primarily looking at very old data. And unfortunately, that's what we just keep seeing here. In that report, they actually talked about the possibility, and the markets basically responding with the possibility that the Federal Reserve may increase the federal funds rate by 1/4% or higher the next time they meet June the 14th, which is so interesting. Pay attention. If you watch this show regularly, you know that just a few days ago, I was talking about that the markets were excited about some reports that came out talking about bringing down the federal funds rate the next time that they meet. So just one report that is looking at historic data changes their mind from bringing the Fed funds rate down, which is the most powerful tool we have in managing inflation, to now bringing it up. That doesn't seem like they have a real good grasp on what is happening. And guys, you need to understand the more that I learn about this, I'm not saying I have it all figured out. But what I do know is that they don't have it all figured out either. Okay, so you're watching people that are reading very old reports. So it is the general that is trying to make, decisions about a war that's going on in California, but the general is in Washington D.C. and they're getting the reports on horseback. So it takes 3 weeks to get the report about what's happening on the battlefield, and they make a decision as to what to do, and they send it back, and the horse goes back 2 weeks, and guess what? The war's over. Okay, so the battle is over. So this is similar to what we're seeing here with them reading these old reports when we're sitting here going, "What are you talking about?" They're saying that gas is going up while you see it coming down at the pump. And then they say, "Hey, gas is going down as we see it going up at the pump," because they're getting old reports. Okay, so let's take a look and see where we are. Right now, we're down 8 basis points on the mortgage-backed security. We're up 5 on the 10-year Treasury, stuck here at the 350, which is good. That is definitely a psychological ceiling that we do not want to mess with. In this case, it's a floor. But over here, you see that we are now, look at how different we are. We're down below all of these technical indicators on our mortgage-backed security. We now have to break through all of these lines and these indicators to get back above that massive 200-day moving average that we've been fighting with for about 18 months now to try to really get the markets to turn convincingly and see us get down into the fives and then hopefully down into the fours in the near future after that. So let's take a look and see. We'll pull up here quickly our Brent Bruce Daily scenario, go over and run our 30-year fixed conventional, very well qualified 30-year fixed home loan. And let's see what we've got. All right, so we're at 6.625 with Flagstar. So Flagstar is leading the pack on the no point loan. This is giving a little bit of a credit of $392. PRMG is not far behind. Cost of 511 to get that 6.625. And we always like to take a look at United Wholesale, the largest wholesale lender in the country, 6.625% at a cost of about $1,000. Now let's take a look and see what it costs for United Wholesale to get to that 5.999 that we always pay attention to. 1.263. So you can see, guys, it was not long ago. I mean, what was it, a week, 10 days ago that we were talking about 5.999 at a half a point. Now it's at 1.2 points. You see the way that these things move back and forth, reading those reports and the way that the markets respond. Let's take a look quickly here at our scenario, our parameters that we're taking a look at here today. And that is what we have going on. Now, the next big report that is coming out is on the 26th of May, which is our personal consumption expenditures report, which will be a big report. We're looking for these reports to come out in order for us to get a little bit of juice and push above those ceilings of resistance and try to stay above that 200-day moving average for a number of days and begin to bend those moving averages so that the leading averages, the ones that are closer to us, are the shorter terms, but above the 200-day moving average before we're really going to start to see some dramatic improvements. But I am still very confident that we're going to see those dramatic improvements over the rest of this month and through next month as these reports come out. But as you can see, and if you've been watching this show for a long time, Stuff comes out of nowhere. The government makes moves, international, all kinds of different things that happen that do affect home loan interest rates. And that's why you watch this show and you pay attention to what's going on day to day. Let me know your thoughts, concerns, comments. Make sure that you like, subscribe, and share, and hit the notifications button in the top. And I'll get back to you again tomorrow.